What's up YouTube? This is your boy KCG Trades coming to you live with my second YouTube video. I just want to say thank you to everyone who supported my first video and is supporting the channel. In this video, I will be doing a little bit of an extension of my first video. If you haven't seen it yet, the link is in my description below. And in this video, I'll be talking about 5 things you should ask yourself before investing in the stock market. Let's go. Now, the first thing to ask yourself is, are you in debt? If you are in debt through student loans or credit cards or other liabilities, I personally recommend to not invest in the stock market just yet. And I know in my last video I said that investing in the stock market can possibly help you get out of debt, and that is the case. But once again, my personal recommendation is if you are a beginner to the stock market, I do not suggest investing to get out of debt. I personally recommend paying off your debts before you start investing in the stock market. The reason I say that is because investing is a risk. When you invest your money, there is no guarantee that you will make money back. Investing also takes a while to get a substantial return. If you're trying to get lucky and pay off your high interest debts with your investment returns, you're putting yourself at risk of digging yourself a deeper hole rather than getting out of it. If you are investing money that you don't have or are investing money that you really need, your risk to reward ratio is too high, where it will hurt you more if you lose rather than the possible gain from the investment. And whenever that is the case, you always want to stay away from that investment. It is always key that your reward is higher than your risk. So basically what I'm saying is get out of debt first before you start investing. Number 2 on the list is, do you have spare cash at the end of every month? After paying off all your expenses at the end of every month, do you still have cash left over? If the answer to that is no, I don't recommend investing just yet, and I do recommend to find a way to decrease your expenses or increase your income. The reason I say that is because when investing, it is key to have enough savings to maintain your everyday lifestyle. Which leads to number 3 on the list, do you have an emergency fund? I'm sure you all know what an emergency fund is. Knock on wood, something happens to you or your family where you need to use a large chunk of your money, or you're in a situation where you get laid off and you won't have income for a while. Do you have an emergency fund set aside for times in crisis? Having an emergency fund is crucial because we never know what's going to happen in this world. And we have to play on the defensive side because, once again, knock on wood, if anything does happen. If you don't have that emergency fund set aside, I don't recommend investing just yet, and I do recommend saving a bit more and putting cash away little by little to have that emergency fund. Which leads me to number 4. Are you okay with losing the money that you invest? I'm not saying that you are going to lose the money that you invest, and if you invest wisely, the chances of that are very slim, but once again, there is always a chance. Investing is a risk, and there is no guarantee, like I said before, that you will make money. But when you have a better understanding of what you're getting yourself into, you will realize that there are many ways to minimize your risk while having unlimited potential for gain. But it is key that you are okay with losing the money that you want to invest, because if you're not, you should not invest it. The reason I say this is because when you're not okay with losing the money that you invest, you begin to get too attached to the money that you're investing, and you will begin to trade and invest emotionally. And that is the worst thing to do. You will feel heartbroken when you are down, and you will feel extremely excited when you are up, causing you to make ill-advised decisions. I know because I've been in that situation before, and even to this day, I'm still trying to work on not trading with emotion. The key to investing and trading is putting your emotions to the side. I know it's one of the hardest things to do because even to this day, I struggle once in a while with handling my emotions. And that is something I'm trying to work on. But if you are okay with possibly losing the money that you invest, while still being able to maintain your daily lifestyle, you are on the right track to begin starting investing. And lastly, number 5, have you been practicing for at least a month with a demo account? For those of you who don't know what a demo account is, it is basically a fake account with fake money investing in the real markets. You get to make all the same trades as you would in the real markets, but you don't use real money. This is a great way to start practicing and start learning. A lot of people actually skip this part and dive right into the market. The problem is, it's like diving into a 10-feet swimming pool without learning how to swim. Chances are you will drown or struggle until somebody saves you. Some might get lucky, and a lot of people do get lucky with investing in the stock market because they make some money their first couple of trades and they automatically think they're an expert. Don't be one of those people because the market will drown you sooner or later if you don't learn how to swim. Start investing with a demo account for at least a month. The demo account should provide you with at least $50,000 of fake money, and with the fake money that you get from the demo account, try to actually be profitable in the time that you use your demo account. Because if you can't make money using a demo account, you will not make money using a real account. Try to practice as much as you can. Try to get comfortable with all the different order types, all the symbols, and the market in general, and just the whole structure of things before you dive right into the market. So that basically sums it up. Just to let you guys know, if you guys have any questions or concerns, you guys can message me personally or leave a comment down below. I will do my best to help you out. Just to recap, the 5 things you should ask yourself before investing into the stock market is: number 1, are you in debt? Number 2, do you have spare cash at the end of every month? Number 3, do you have an emergency fund? Number 4, are you okay with losing the money? And number 5, have you been practicing with a demo account for at least a month? If you answered no to being in debt, yes to having spare cash at the end of every month, yes to having an emergency fund, yes with being okay with losing the money that you invest, and yes with practicing with a demo account for at least a month, you might just be ready to invest in the stock market. Once again, if you liked the video, please hit that like button, subscribe, share with your friends and family. Anything you guys can do to help support the channel, I really appreciate. And just to let you guys know, I will be trying to make one video a week, so stay tuned for more. Take care, guys.